How's it going, guys? We're going to take a quick look at the Bitcoin chart. So we're currently now looking on the weekly, and the weekly candle now has been sold off pretty dramatically in towards Tuesday, or today, Wednesday. But we're having basically 2 days. So we're having Monday and Tuesday as sell-off. And we also have now 4 or 5 days left until the close. So there's a lot of things that can happen. We're having FOMC, CPI, data today, okay, and that's going to be a trigger for price movement. S&P 500, Nasdaq is moving into all-time highs. So overall, the risk-on environment is actually still bullish. AI has been taking quite a hit. Okay, so there's a lot of things going on, and I don't see. Bitcoin is still okay, but a lot of alts I don't really see the reason why we did a 50% haircut on most. Okay, so we remain to see sort of how we shape up, but we're gonna look at some levels on Bitcoin, then we're gonna discuss the market structure, or we can actually start with market structure just to make the whole video very simple. Okay, I tend to do this on most of my videos, right? So overall, a fractal, right? You have a consolidation, you're having expansion away from that consolidation. Within or from that expansion, you're having a lot of consolidations as well, or non-consolidation, okay? And then at some point, you reach supply, okay? And then you start creating a new consolidations that either can be a continuation of the current trend, or it can be a breakdown of a reversal, right? So if it's a breakdown and price reverses, and that becomes the meme. A lot of people on Twitter post the week of theory, okay, right, which is this basically a week of distribution, and we're going down, but we never know until it actually occurs, right? But what I want you to focus on is that when you create these price pauses, they either turn into a reversal, or they're going into a reaccumulation and a continuation of that extension. And in between this, right, there can be rates below, reclaims, right, with people like to call deviation or stop runs, manipulation, whatever. It doesn't matter. It's just that the order book, it's thin at some point, right, and price just goes into the void, fills, right, and moves back up, right. It's just simple PA. But we are just trying to go sort of sentiment using seasonality, trends, whatever, to try to get in at the best possible price, and combine stuff that will happen, such as FOMC, CPI, PMIs, whatever price data that can cause extreme volatility, right, and can shake us out of our positions and whatnot, right. And we also try to compare markets, right, and we try to compare Bitcoin to the S&P, Bitcoin to the dollar chart, just to get a sense of if you are in sort of a risk on, risk off, sort of what is the macro sentiment in general, right? And then we tend to compare altcoins to Bitcoin to see, if you are in a risk on, if you are sitting at a good place. So we assume that as long as Bitcoin sort of moves upwards or sideways, altcoins usually tend to perform okay. Okay, not all, of course, never the case, but at least the big ones normally tend to perform all right. So the issue given this past week or weeks has been that Bitcoin sitting at all-time highs, equities pumping into all-time highs, and we're seeing a large haircut on many of these altcoins, right, which is kind of extreme. And then it sort of makes to compare in the markets slightly more difficult overall, right? Because that means that if Bitcoin does an overall larger correction, we will actually see a full market cycle on altcoins, which is sort of the scary part. And the issue here is not that you can buy spot position and you can be comfortable, but most of us, as well as me included, right, we do take on leverage, okay, and we use sort of high risk to get something back, right? So when you're using leverage, it becomes very difficult, and when you're not prepared for high vol days, right, or high volatility days, you're going from a compression standpoint into an expansion, and you can get caught off guard, okay, which is sort of difficult in general. Okay, so back to market structure here. So if price has come back down, we can tend to sort of assume that price will then continue to expand higher. Okay, so if you understand this sort of idea or this concept, and we look at Bitcoin, right, this is sort of the consolidation. This is part of the extension moving higher, right? And then we're creating now a price pause into the summer months. Okay, and of course it happened before, but usually we always do that, right? From March, May, whatever, we're doing these sideways PA, right? So you can assume if you use this previous candle, you can say, okay, so if this is the range high, and just assume, let's use that candle, and this is the range lows, okay? And we have taken out the highs and the lows, but at this point we are just sort of sideways, right? There is nothing really to put your hat on, right? So the idea now is that, okay, so if this is a stop run, we are expanding into highs. We're having a price pause into the highs. We can even go towards the range lows, whatever, and then we can assume that we're going to get a sort of a price continuation of that move, moving back up, maybe let's say to 80K or whatever, right? And then you're having the other side of this. Okay, so if maybe we are going for a larger correction, especially if S&P 500 do correct, most likely Bitcoin will follow, right? So that will lead Bitcoin into a correction, maybe back into range low if you're getting an extreme correction, right? So this is assuming this is within summer months, and then post summer month we might go back up and go higher. But if you do get a larger correction in equities as well over the months into October, we can assume that we're going to close in some of the void here, right? Which means that anything can happen within sort of this price point, right? There's no definitive level that I want to point out, except of course that this is sort of the most extreme part. So if you understand that these are the two main ideas, right? So as a trader, right, we're trying to understand if this is a price pause in terms of bullish reaccumulation sort of phase with price going sideways, or if this is a reversal of sort of a market cycle. Okay, we can sell off, right? So if this is a larger reversal, what happens is that price usually comes back down and fills in sort of the inefficiency that has been created on the way up, okay? And then price trying to extend towards the main place of where we have the bulk of liquidity, usually close to the prior consolidation that we initiated the move away from, okay? This is sort of a simple PA, which being sold around, okay? This is sort of the thesis, everybody understands this or should understand. If you don't understand this, I don't think you have any reason to be trading, right? So the thing is that price then comes back into these consolidations. So let's just point out this is one smaller part of the consolidation, right? This is the larger part. So if you're just going to use this as a sort of an idea, we would then say, okay, so the 30K mark towards the 25K mark is the large demand of a full market cycle. Okay, so let's take off the drawings here. So a full market cycle would mean that price would then go back into the core liquidity around 25. Okay, this is what I assume or reference as a full market cycle, right? And then you're having this here as just a price pause, or also a price consolidation. Okay, and then you're having SR. I think this is a tag, so I like to reference this as sort of SR points, right? So this is a larger SR point, right? And then this is another SR point, right? And then this is as well SR point. SR points are levels that I deem holds liquidity, but that's sort of what we're trying to explain and find out, right? So we assume that these levels holds liquidity, right? So range lows, the void below usually holds liquidity. This is also if you're going to a lower time frame, you will see a consolidation. Usually that holds liquidity, and then you're having a larger consolidation, slightly lower, okay, and then you're having the bulk of liquidity as a full market cycle. If the bull market is not over, right? So I think the most extreme part would be a sell-offs towards sort of the 45K. I think that would be the most extreme. That will also take us as a let's just check here, as a 30% correction, which basically has already happened, in my opinion. So this is sort of the extreme part. In my opinion, I think we're just gonna go sideways from here and start moving higher. That's my personal opinion. Now, if that's gonna happen or not, it's a completely different story. Okay. So now we sort of discussed levels and market cycles. So if somebody tells you on Twitter or whatever else that he thinks that we will go towards 30K, we will go towards 45K, right? Or we will go towards 60K. It's just a personal opinion, right? It's not objective, it's subjective, right? It's a personal opinion of what he thinks that the market will do, right? It's based on imagination, it's based on nothing, right? Just understand this, right? It's just an idea of what he thinks that will happen based on his own perception of the world and his own experience, right? So, but there's a few things that we can actually use to determine what will happen in the future, and that is not based on levels, right? So levels is sort of the basic aspect, in my opinion, of trading, which means that that's sort of just where market holds liquidity, right? So it means that the faster and harder we go lower, the more likely it is to cause a bounce. And most of that is based on how the order book sort of work, right? And the liquidity that is present in the market. But regardless, what is key drivers for the market are based on other things and aspects, in my opinion. Okay, so we're going to start off just to mention a few things, and then I want to just mention how to build sort of an edge within the noise. So one thing is that I haven't used a lot. I come across actually pretty recently, which is seasonality. I'm not going to go in depth with that. There's a lot of things. If you research on Google, you will find a lot of stuff based on seasonality. So seasonality is actually pretty simple. It's actually pretty straightforward. Is that summer months tend to be sideways with low liquidity, while we're having a lot of price movement, usually from September, October, starting a potential bottom throughout Christmas months into February, March, April, or May, okay? And then price tend to go back into a consolidation phase towards the summer months, okay? So, and then we also have years based on election, right? So, which is called election years. We also have seasonality based on data in terms of FOMC, how price moves into that. Seasonality on high rates, low rates, and whatever, okay? That's something to take with us, and we can build a case what usually the market does in the past, okay? So if you understand that most of the time, or the majority of the time, price tend to compress over summer. If that is the case, and now we're talking about S&P 500 and equities, right, and Bitcoin, and we don't have any price history enough for altcoins, right? So they're not in the picture of this, right? We just assume that they are betas of legacy markets and that they will behave somewhat similar unless there is a very strong narrative pushing it. So if you assume these concepts are correct, we tend to see summer do a contraction, right? So if price is contracting during summer, we understand that we do not want to bid hard during summer, okay? So if summer usually tend to contract, okay, this is summer. And then often we can tend to sell off in August and September, okay, which means that, okay, so if you assume this is summer, then we're having from September, we're having a potential small sell-off, okay? And then from October, we tend to continue higher, okay? So now we're having three ideas, right? So if you're going to understand this, so this is summer, this is August, right? And then this is October into the next year. If you understand this concept, right, we want to be mindful going into the summer, okay? And this is sort of a larger edge than thinking about what level and where price will go to. That means that do you want to, you can trade the range within the summer months, but you don't want to bid hard in terms of long for the next year, because we assume that price, wherever price is post summer, we will do a small correction, right? So if you are currently sitting at, if you're sitting at 80K, I think we will probably go towards 60K maybe in September. Then that will be, right, that's the timing aspect of trading, and we think that will be a good potential time to buy and go hard, right? Okay, so this is sort of one important aspect I think you're going to take with you. The same goes with FOMC, right? So if we have done the last sort of times sold off into FOMC, okay, you want to put that date on the chart. And if we sell into FOMC, we can assume that maybe we will have a bottom and start to expand this is pre-FOMC, and then we expand post-FOMC. You know, if that is the case, based on your evidence or your research, then that means that you don't want to go hard and longing pre-FOMC, right? You want to wait in towards the sell-off that will occur right before or right after, okay, depending on whenever it happens, right? So it's the sell-off. You're waiting for a potential sell-off during the correct timing of your research, and that's sort of your edge, okay? So that means that the timing is more important than the actual level where price is, okay? Now we discussed levels, seasonality, and then the other part is also macro environment, right? Understanding that what is the market pricing in, right? So what are we looking for? Are we looking for lower inflation number? Are we looking for higher inflation number? Are we looking for good job data? Are we looking for bad job data? Is the outlook for rate cuts? Are we outlook for rate hikes? What are we pricing in, right? So there's also sort of a narrative being pushed, okay? And also the narrative combined with price action, right? So if you assume now that if price is just going upwards and we're expecting rate hikes, any bad news that might disrupt rate cuts, going up, and we expect rate cuts, any news data that disrupt this idea will cause what? A sell-off, right? Because algorithms, people, right, they will hedge, right? And that's sort of the idea. So then usually price, let's say, it sells off on bad data. If the bad data occurs usually closer to the bottom, you will start to assume that there's a new narrative being pushed, right? So maybe it's not that bad after all, maybe this, maybe that, right? And then you're going to a contraction phase. Once you're sort of getting that the market is anticipating positive data again, you would see price moving into that, okay? And then once you're getting the news, usually it's sell the news event, okay? And then the narrative continues and we're pushing higher, okay? So that's sort of a way that the market works, right? So then you're having sort of you're having levels, you're having seasonality, you're having macro narrative being pushed, okay? And lastly, you also need to have something to confirm when you want to enter or what to look for to make this a bit more not subjective, a bit more objective, right? Which is sort of easier for you to understand. So for example, I personally like my indicator that I have built, right? It's not perfect. It just gives an idea of what we can assume. So you can see here at the bottom, I have combined 4 or 5 different buy signals, right? So when I get a combination of them, or especially on high time frame, it gives me the confidence to enter. And if it's wrong, it's wrong. Of course, I don't really care. But the idea is that you can combine that with seasonality. You can combine it with whatever you want, right? Or you can get a buy signal and then you can combine it with the timing or whatever you want. So just going to give here a good example how you can see that this indicator gave the absolute sort of bottom for the bear market in 2018-19. The absolute bottom was confirmed here with the bomb. And the hills here and the COT proxy, and the same goes for the market, the bear market in 2022 as well. Maybe it was not as perfect, but I think at least it got it was actually perfect. It was the absolute bottom that got confirmed, and then you had this massive spike here in Bollinger Bands. This green is this it's extreme how we move away in terms of Bollinger Bands. And we're getting on a weekly basis 91, which is, is the most extreme it has been ever, right? So you're having bullish divergence, smart money proxy, Bollinger Bands, and then we're having the PA reversal, and then these combined sort of symbolizes sort of the absolute bottom. The sell signals, they do not count. They are just there to show me that if I get a lot of sell signals in terms of what I believe is the top, not based on the signal itself, the signal just shows a reversal in candle formation. Okay, so that means that if this would be a weekly sell signal, I would take it due to the extension away into new all-time highs. Okay, because it's just based on candle formation, right? There's nothing more to it, right? So sell just means that it's a reversal candle forming. Okay, so which is you can't use that as a sell signal. Generally speaking, you don't want to use sell signals because most of the time they will be lying. Okay, buy signals are usually much more important, especially on high time frame. So if you combine that now, you have a combination of a lot of things, which would then be, let's just do it quickly here. We have levels, seasonality, macro, narrative, okay, and then we have buy signals. Okay, the combination of these is sort of what causes you to enter. Okay, so all of these play different parts, right? So this will help you with making sort of smart decisions. Okay, which is, I think, is extremely important. If you neglect one of these or you only focus on one of them, I think you're not going to be good off, especially when it comes to trading, when most people or a lot of CT, is either just based on narrative or just levels, especially just levels, because levels are the biggest lies, just imaginary, subjective opinions and fantasy, in my opinion, right? It's just, if price would to go, right? You can say if price would to go into 30K, that would be an extremely good buying opportunity. Okay, that would it would look like a full market cycle, in my opinion. Okay, but the probability of going there, I think that should take maybe at least 1 year if you start moving towards that level, right? So that means that if you believe that we're going to 25K, turn off your screens, come back in 1 year and see if we're there. You know what I mean? Like it's you can't just throw out numbers just based on a level on price action. It's absolutely insane. Okay, so the more you mature as a trader, at some point you will understand that narrative is actually the most important, and as well as with seasonality. Now, buy signals has been very good to me lately. Okay, so let's go back into the Bitcoin chart and just look at some levels lower here. So we had here, you can, as you saw, and we had a buy signals at the low here in terms of a structure wise, right? We're just going to point out a few things here before we continue. So if this sort of the SR, this low price point here, you had one sort of sell off below that, got quickly bought back up again, and then you're having the expansion towards all-time highs, right? And then now, as you see here, sort of called a double top, right? Just sideways pattern with it, which is this resistance, okay? And then you can assume that this is sort of the range, this is sort of the price run below that, okay? And we can make an argument in terms of price action here that maybe we're just retesting now back into this consolidation, okay, which is not too extreme, and you want to sort of see price then hover and start moving higher. I think sort of that is the main thesis that is happening, in my opinion. If you start sort of selling off below here, I think that would assume that we're going towards this mark around 60K, then maybe slip lower in towards sort of these levels, and then we would sort of cause that divergence, so to speak, right, in towards the the October, okay, and then you will see sort of the extreme price action and then back up. I think this is the worst case scenario that I can imagine. But let's see how things unfold. Now, in terms of 8-hour here, you can see that we're getting a very light. The triangle is very light buy signal. Okay, and the combination of this one with others is usually the good one, but this is the 8-hour. Okay, so we're having 8-hour buy signal with some smart money proxy coming in. Okay, which is not bad. Usually it's premature, not always, but often it can be a bit premature. We're not seeing extreme movement away from Bollinger Bands, such as we had previously. Okay, so that's something to keep in note. Then on the 4-hour, we actually have a lot of extreme or pretty decent buy signals. Okay, so we're having a larger triangle, small triangle, we're having a bomb, we're having a triple or at least double smart money proxy together with the expansion away in terms of Bollinger Bands. Okay, so usually this this results in an uptrend, right? So you can look here on the past. We had it right there, we had it right there. Now we're seeing it at that price point. Usually we do get an extension away from that, right? So it doesn't mean that we have to break all-time highs, but at least I think something like that makes sense in my opinion. Okay, so that's the 4-hour. Now you can take that as well into the 1-hour chart as well, which is actually pretty extreme. We had also extreme here, but we didn't have any buy signals, right? So here we're having both bullish divergence, we're having a lot of smart money proxy together with extreme Bollinger Bands at 93. Okay, but we're having now double, right? So this is twice as extreme. If you look to the past, we haven't had this extreme in quite a while. Okay, so we will see how that unfolds. In my opinion, most of the time this results in an extension upwards, I think, towards the 70k, might even be the bottom in my opinion. Okay, so that's about it. I hope you got something out of this, guys. Let's talk later. Peace out.